Hello, everyone. This is Tom from MarketsFlow. Welcome to this Webcast 17. It is the 23rd of August, and we're midway through Friday as we bring you this weekly performance for the week ending August 23rd, 2019. I am dialing in from Montreal, Canada, and the weather here is cooling down to 22 Celsius. When I arrived on Sunday, it was about 30 oddish. So I'm interested in knowing how Adam's doing back in London. How is the weather there, Adam?
Well, we're having a sort of resurgence of late summer. It's been, I think, 28 today. Very, very sunny, very, very pleasant. I think we need to make the most of it because there probably won't be a lot more of this. But an uncharacteristically good bank holiday weekend is on its way, I think.
Oh, very nice. Great. And such a weather to go along with the bank holiday weekend would be great. Excellent. Right. So this is Webcast 17 for MarketsFlow's portfolio performance for week ending August 23rd. Our podcast is recorded every Friday and is uploaded immediately on YouTube. Please subscribe to our channel so that you can receive it as soon as it's made available. MarketsFlow is FCA authorized robo-advisor and digital wealth manager. We're also SEC authorized. You can invest in our optimized portfolios from £10 and sign up in under 10 minutes. Go to the App Store or Google Play to download our app. Visit marketsflow.com, where you'll find plenty of information around how to invest in our portfolios, help section, and much more. Your deposits are protected by the FSCS for up to $85,000. Before we get started, I'd like to run through our disclosure. Your capital is at risk, and any financial performance figures referred to the past and past is not reliable indicator for the future. So with that said, let's get to the key question. How have our portfolios performed this week, Adam?
Well, up to now, and where are we? We're probably 2/3 of the way through the Friday session, with a couple of hours to go. We currently stand at the following. High growth portfolio is up 0.16% this week so far, and if we take that from start of June when we launched accessible portfolios, that's 4.55 to date. Growth portfolio is up 0.13% this week and up 4.07 since that start of June date. And the ISA portfolio up 0.09 this week, and that is up 2.88 since that start of June launch of accessible portfolios.
Many thanks, Adam. That's great. So how have the markets performed as a whole for this week?
Well, it was looking like a rather less dramatic week than usual, given what we'd had the previous 2 or 3 weeks. But now, coming to where we are within Friday, I can tell you the S&P currently is down about 1% on the week, measured against where it closed last week. And this has been a rather more dramatic day than Monday to Thursday. So although with our own figures that I mentioned a moment ago, they might sound somewhat modest. At least they're positive, and they've been achieved against the backdrop of a market that's down 1%. So we've outperformed by between 1.09 and 1.16%, depending which of the 3 portfolios you look at. But about the market, a little more detail on that. Thanks to Monday being a decent positive day with, I think, a little more than 1% gain that day, we've actually spent most of this week at slightly higher levels than where we closed last week. And it was looking like a calm, relatively low volatility market. But clearly, as we've come towards the end of the week, that's sort of unraveled. And we've reversed the early week gains and done somewhat more to end up in negative territory. As I said about volatility, that was noticeably lower this week, and that was coming through in implied volatility as well, so affected options pricing. But today, with the markets taking a turn for the worse, higher volatility is back since we opened this session earlier to find stories of Chinese retaliation in the trade war, which had knocked at least 1% off US markets. But although most of that came back fairly quickly, we then were treated to another story a couple of hours later, Donald Trump telling US firms to find alternatives to China, which sent markets back down and gave volatility another leg up.
Very interesting. Okay, thank you for that. And what about the allocations within the portfolios?
Well, the market flow signals generated this week gave us a distinctly negative message. As a result of that, we didn't allocate much money into the market. And what we did allocate was purely in stocks with no options. And with rather few buy signals being generated, there wasn't a lot for us to get enthusiastic about. The rewards available for writing options, and remember these were becoming less generous as I mentioned, we judged those rewards to be insufficient to push us into doing any options writing in what remains a slightly uncomfortable market. And at no point were we any more than about 25% allocated. However, I mean, with market behavior generally, Monday to Thursday at least, being less choppy than in previous weeks, our holding periods were longer. But yes, a conservative week of running portfolios.
Great to hear. So apart from today, volatility has not been such a big feature. How did that affect the way we risk managed our way through the week?
That is correct. Yeah, right. Volatility, certainly up to yesterday, and in fact, neither has dispersion been particularly large. Dispersion meaning the amount of variety of returns across the different stocks in an index. So perhaps the combined message is from saying that there has not been very much opportunity to make or lose money, whether it be through positioning for overall market exposure or through stock picking. And probably the same has been applicable this week to options. So less incentive to be active in all these areas that we operate in, on top of which, as I said, our signals gave us very little reason to take any risk. So all of that manifested itself in low levels of actual risk taking this week on our portfolios. It comes down to the risk return trade-off. Not enough conviction in the prospects of upside to take the step of exposing ourselves to the potential downside of being wrong. And today's events so far don't make things attractive either. So it would be nice to wait to see how this plays out and perhaps settle down or whatever Monday brings.
Thank you. It seems like we've been cautious, and it's certainly been shown in our positive results. So what do we look forward to from here, from over the next week or two?
Well, it's clear that this trade war with China will dominate the news still. That won't go away quickly. Aside from that, some moderately important numbers on the US economy being released in several batches next week, Monday, Thursday, and Friday, I think, being the main days for that. So people will be scrutinising those, and there's potentially there are catalysts there, if any of those surprise, that could set the market tone from one day to another. People will also be looking for any more scraps of evidence as to whether any of a number of developed economies are getting closer to recession. That'll get some attention in the news. But what we'll be watching for mainly, because we're less fixated on economic news, I'd say, than most, we'd be watching for just the behavioural characteristics of markets from day to day, and any change in those, particularly in volatility. And we'll be calibrating that together with what our MarketsFlow indicators are telling us, and hoping to see more opportunity to make money than we've seen this week.
Indeed. Thank you, Adam. So that brings us to the end of our podcast. We will be back again next week, as usual. In the meantime, thanks for watching or listening to us on YouTube. Please remember to subscribe to our channel and have a great long weekend in these soaring temperatures. Make the best of it. Take care. Thank you. Bye-bye.